your most favorite ice cream brands, whether it's Cornetto, Magnum or Quality Walls, are set to get a new home under a new company, Quality Walls India. This, as Hindustan Unilever, India's largest FMCG company, is demerging its ice cream business into a standalone listed entity, hopefully by the end of next financial year. Now, what does this demerger entail? What is the rationale behind that? And what is this cool business going to entail? We are joined by Ritesh Tiwari, the CFO of HUL, to talk to Mangalam and me, not just about the ice cream business, but also about HUL, the strategic reset that's happening here, and the new management that's coming in. Well, Mr. Tiwari, thank you so much for speaking to CNBC-TV18. Let's start off by talking about the reason we're here, which is to talk about the ice cream demerger. Quickly run us through the very basic details of the demerger. What is the, what is Quality Walls India going to entail as a corporate entity, as a company? And what's been the basic rationale behind the demerger?
So ice cream overall has a very distinct business model. It runs in cold chain in terms of manufacturing, distribution. It is prone to seasonality more compared to any other business that we have. It also has higher capital intensity compared to other business that we have. This is what makes ice cream very different to the rest of the business. At HUL, it has low synergies because of this very reason with all other categories that we end up doing business with. So that was one reason why we said that we need to have a solution which is very different. So hence, if ice cream is run with a focused management, with different agile strategies which are suited to its own distinctive business model, it can unlock more growth going forward. The decision was that once Unilever globally decided that they will separate the ice cream business and they will end up listing it, we had to, as HUL, take a decision, what do we do with it? The board came to conclusion after a lot of discussion that it is in best interest to separate the business in India as well, and then form a separate company, demerge it, and then list it. Right. This will ensure that all shareholders will be able to participate in the growth story of ice cream in India.
Right. So if you could give us a sense, as delicious as the business idea and the potential and the product sound, it's a very tough business as well, because supply chains, the capital that it requires for you to have a cold chain across the country, etc. If you could give us basic numbers on the ice cream business, it's about 2 to 3% of your revenue right now. What kind of EBITDA margins does it make? What kind of capital is invested in the ice cream business?
Yeah. So ice cream is roughly for us an 1,800 crore business, and it makes, if I look at last few years of margin, it makes low single-digit margin. This is a business now which is in investment phase. We are a national player. We supply ice cream across the length and breadth of the country. And when you do that, the overall cost of running the business is high, which is why a business like this gets a lot of benefit when it starts to scale up. Our business for the last 1 decade has grown in double digit. And going forward, given the headroom which is there to grow of penetration consumption, we expect this growth trajectory to get even stronger going forward. And which is why today, when the business operates at a low single-digit margin on an average, we will get into an investment phase further. So margins will further go a little bit down. But from there onwards, as the operating leverage kicks in, we'll then start seeing acceleration of margin in times to come.
So if you could give us a sense of the capital that has been invested in this business already, because it's housed in Hindustan Unilever right now, I'm sure there are a lot of operational synergies that come by as well, which may not come once it's demerged. So what are the kind of investments that you entail out there? How low can the ROCEs go before they go up, and what are they right now?
Yeah. So the key criteria there is the amount of capex investment. So for a typical FMCG company, let me say Hindustan Lever example, we spend approximately a little less than 2% of our turnover into capital, in capex. Ice cream business operates anywhere from 5 to 7%. Of course, there are years we'll a little more, a little less, but it operates at 5 to 7% capital investment. The point there is you have to further add capacity because of the growth which is happening in the business, and plus the distribution network which you have to set up.
You spoke about low single-digit margins is what you see right now, and then after the investment phase, I think your listed peers does about 5 to 7%, if I'm not wrong. Is that where you would look to get at eventually, or do you think post-investment phase there is scope to expand margins further beyond that?
So if I take margin and make two different components of that, material margin, which is your sales minus all the raw material variable cost, and there's a fixed cost which gets amortized as part of the cost to the entire business. When it comes to material margin, we make industry-leading margins. When it comes to total margin, when you add variable cost plus fixed cost, our margins are lower compared to the benchmark that you quoted. And the reason for that is because we are a national player, and hence our infrastructure is spread. As you start getting more amount of scale further in the business, you start getting operating leverage. So the second component today where we are, let me say, under index compared to market, we'll start getting that component also getting counted in terms of improvement in margin. And once that starts to kick in with further amount of growth and scale, we should be able to reach high single-digit margins.
Right. That's very interesting because, you know, the variable cost that there is, you said, is industry leading already. The fixed cost currently is also shared by the large Unilever, platform. So just trying to figure out if it is individual, then maybe the denominator would be a lot smaller, and as a result of which it will be amortized a lot more.
So ice cream has a separate distinctive business model. So the entire fixed cost for ice cream is ice cream specific.
Got it.
So when I was quoting the example of a fixed cost, this is all ice cream assets. Because ice cream has separate factories.
Yeah.
It has separate distribution system. The ice cream cabinet which are in the marketplace that we end up owning either directly or indirectly. I was referring to all this infrastructure which is all ice cream specific. In fact, the synergy with the rest of the business is very limited.
Got it.
Especially when it comes to go to market. Our sales force, it has a separate sales force on its own. So there is no dis-synergy, let me say, on such operating costs of supply chain that will happen after the demerger.
And what happens to HUL's overall margins, because our ice cream is fairly margin dilutive, and what happens to HUL's own ROCE? How much improvement do you see there?
Yeah, so ice cream overall is 3% of turnover. It's 1% of our profit. So there'll be small improvement in our ROCE and margin after the demerger, but it is small and immaterial, I would say.
Right. And ice cream as a business, though you spoke about the large scope of growth that there is, it is still seasonal in nature.
Right.
And I think you have spoken in the past, and you've been one of the players that's spoken about how you're looking at deseasonalizing the business. So how do we look at that? Because if an investor is looking to invest in a company, they would want to be able to reap profits or returns through the year. It cannot be in one season. So how are you looking at deseasonalizing this? And even globally, in fact, for Unilever, ice cream, a lot of investors have been talking about how ice cream as a business there, the consumption is actually coming down. Is India an outlier in that sense? Is the scope actually a lot more here?
Yeah. So two, three different angles to this. To start with, our key strategy has always been for the last few years, how can we start deseasonalizing the business? Yes. Now, ice cream can be seen as a dessert, and hence it plays a role in the entire post-meal sweet category. It also has a role as a snacking category. And once you start looking at it a little differently like that, you start seeing that there are many occasions more where ice cream can be center of the plate. So at Diwali season today, for example, we have our own variant which has gulab jamun into it, and we end up marketing that at length during Diwali season. For East, when Pujo happens, we have Nolan Gur ice cream. So we have now launched flavors which are relevant during festival season to start to ensure we keep deseasonalizing. I was quoting an example to you earlier. A US market is much more colder than what India is. Yeah. The per capita consumption there is 13 liter, and we have 600 ml. So the headroom that we have for growing is substantial. And which is why for the last 1 decade, the industry has grown at double digit. Our own business as Hindustan Unilever for quality walls has grown in double digit. And once you're able to focus differently and more going forward, we could end up seeing stronger double digit growth from the business.
Could you give us a sense of how your sales have panned out across the year over the last many years since you've started to deseasonalize it? Earlier it was obviously Q1, Q4, and now if you could give us that split. Earlier what it was and post your deseasonalizing it, or your efforts, how much has it moved?
Yeah, so it's always a gradual move. It will never have a substantial impact. But we keep seeing 100 to 200 BPS move that keeps happening from season to non-season ice cream with every year of effort that we end up making.
So what's the current split right now?
So roughly, I would say little less than half the business ends up happening during the peak of the season, and then the balance business is spread across the balance quarters in the year.
How do you see competition? Because, while you're number 2, we have another very large national player, but we're seeing a lot of the smaller new age D2C brands also that are coming in. A lot of money being pumped in by VC investors also into those companies. A lot of focus on health, low calorie, low sugar ice creams, and they're really taking off, especially thanks to quick commerce. So how are you looking at the competitive scenario? And does that then now, with Quality Walls India also having its own business, its own focus, does that also open up avenues for M&A?
So I quoted one of the statistics earlier. So we have our own direct or indirect 2.5 lakh freezer cabinet. Yes. As an industry of ice cream, we have a little more than 1 million cabinet out of the 12 million outlets which are in the country. So more players start to participate and help support and increase the distribution infrastructure. Every player in the market will end up benefiting from that. Given the per capita consumption is so low this point in time, there's enough headroom for multiple players to coexist. Ice cream is a business which also has much higher amount of innovation compared to a typical FMCG business. What we have done, we focus squarely on innovation for the last several years. And as and when required and relevant, we keep getting also brands from the stable of Unilever into India. Going forward, same thing will happen with the Magnum Ice Cream Company, which will ultimately be the owners, or majority shareholders of the business in India. We will end up having access to the biggest global ice cream company, the brands from them, the tech from them, R&D from them. So innovation will continue to be exciting. That's what will determine the growth trajectory and competitiveness of the business.
Do you have to pay a royalty to the Magnum Ice Cream? And
so today as HUL, we have a royalty contract, which is for all the categories that we deal with in Unilever. And once ice cream gets separated, our current contract runs till January 28. So we're going to pass on the royalty contract, which is all three components. It is component for the brand trademark. The brands that we have in India today, Quality Walls, Magnum, Cornetto, these brand trademarks are owned by Unilever. So the access and license to these trademarks will be passed on to Quality Walls India Limited under the same arrangement, existing arrangement that we have. Today, the R&D is a shared R&D across Unilever globally, and which is why as part of the royalty contract, we also have a royalty contract on technical services that will also get benefited. The Quality Walls India Limited will continue to have access of that as well. And third, importantly, going forward, the innovation and trends, so those benefits will be there for the ice cream business as well. After the demerger is completed in India, and once the global company gets also listed, and they might end up getting into a new relationship of royalty with them later point in time. But as of now, we are equipping the Quality Walls India Limited with access to brand rights, technical know-how, with innovation and R&D capability and leadership from the biggest global ice cream company.
And by when do you expect this entire exercise to complete and shareholders of HUL to get Quality Walls shares in their demat account?
Yeah. So our entire demerge is a court-driven process. We have now got the first motion from NCLT. On 12th of August, we have a shareholder vote to review, and we are proposing for approval for the demerger. Once we get shareholder approval, there are other regulatory steps we have to do. We expect by end of this financial year, the business to get demerged and listed.
Right.
And start trading as well.
How big is the industry likely to be over the next, say, 5 or 6 years? It's been compounding at around 11-12% over the last few years. And where do you see HUL's own ice cream vertical be, say, over the next 5 years? You said high double-digit growth. We just want to understand, what are you foreseeing as a vision for this company? Those who might get those shares want to decide whether they want to hold on to it or not.
Yeah. So one of the information which we'll put in public domain at appropriate time, once all the approvals come of shareholders, etc., is an information memorandum in which we'll talk about at length the new management structure, including independent board, which will be part of the Quality Walls India Limited, the business strategy going forward. But suffice to say, very fact, the overall per capita consumption is so small this point in time at 600 ml. There's massive headroom to grow. And we've seen this in different parts of the world. As overall the cold chain infrastructure starts developing in the country, ice cream gets benefit from that cold chain infrastructure getting developed. So I won't put a number to it, but we do believe strong double-digit growth is what should be expected from the business going forward. And that should then improve the operating leverage and hence the margin. And for us, it's also very important to ensure this entire demerger is very inclusive demerger. So for example, HUL has overall more than 12 lakh shareholders. We have 1.2 lakh shareholders who own one share of Hindustan Unilever. So the way we are doing ice cream demerger, the share entitlement ratio is 1:1. Yeah. Which means for every one share in Hindustan Unilever, the shareholder will get one share in Quality Walls India Limited. This will ensure a fair, equitable and inclusive demerger where every shareholder will be able to participate in the growth story of ice cream business.
You believe it can double over the next 3 years or 4 years? With better margins?
I hope it does.
Okay. Let's move on.
Let's move on then. Of course, coming to what everyone's been talking about when it comes to HUL, which is a change in management right now. I believe Priya Nair has taken over. It's been a couple of days.
It's been first week for her in the office.
Yeah. Yes, of course. So, a few, initial thoughts once Priya's come over. What's it been like? And also,
how's the vibe changed?
Yeah.
Let's put it that way.
Let's start off with that.
Yeah. So Priya is a homegrown talent. It's been 30 years. In fact, we celebrated her 30 years at HUL and Unilever this week. As Priya comes in, of course, she will have her own set of thinking and thoughts looking into the business. Priya, in last role, globally, she was president for the global beauty and well-being business. And that and we've spoken about it continuously, beauty well-being is an extremely important, strategically important category for us in India and segment for us. The expectation of growth from us for beauty well-being is much higher. And all that experience that Priya has in leading the global business will be extremely important for us as she starts to settle into the business. Now,
sorry, any immediate strategic resets also that you're working on putting in place, and again taking on the beauty and well-being, is it fair to then say that, you know, that is one category that's going to be the highest focus area for HUL also to sort of capture in India?
Yeah. So in the last couple of years, as part of our strategy, we've been very clear. Driving competitive growth is our first focus. And as part of the strategy, we spoke about Aspire, our strategy to unlock $1 billion aspiration. We are very clear in India that the portfolio will have to keep transforming. And the effort we've been doing for the last few years continuously on that front. We segment our business into core, future core, and market maker.
Yeah.
And future core and market maker is the space where market is growing disproportionately faster, number one. And number two, this is also the space market is more premiumization is happening there. When you look at this portfolio today, at a point in time, a few years ago, we used to have more than 50% business, which was sitting in core. And now we have more than 50% business, which sits in future core and market maker. In fact, in the last couple of years, we made 500 BPS shift between core and future core and market maker. This is heart of our current strategy. That is not going to change as we keep working on. We had spoken about that overall our portfolio as HUL is more premium compared to industry. Yeah. There's one space we are under indexed to industry, which is beauty and well-being. Yeah. We have a very clear stated business objective to improve by 900 BPS contribution of premium in our beauty and well-being portfolio. So the expansion of portfolio, acquisition that we've done recently, bolt-on, minimalist, these are all basically in service of that one strategic reason that we want to dial up the portfolio. So the business strategy rests on these basically important strongholds. That is not going to change. Now, of course, in FMCG, consumers can change, market can change, overall competition landscape can change, channel landscape is evolving. So strategy, like anything else, will have to keep evolving. Yeah. As Priya settles in, looking into this consideration, of course, she'll end up making her own set of choices. And we keep saying that HUL is a blockbuster book. Every new leader comes and writes an extra chapter, a new chapter in that blockbuster book. That's exactly what Priya will do.
All right, let's hope that happens. You know, this is also coming at a time when the consumer sentiment itself is at an inflection point. We are seeing acceleration in rural demand, and urban is also gradually picking up. So amidst all of this, with the new, wind beneath the sails of HUL or beneath the wings of HUL right now coming with new leadership, do you believe that the time is opportune for the company to grow a lot faster over the next 3 years than it has over the last 3 years?
Yeah. See, there are a few important parameters which determines overall consumption climate and FMCG growth. Number one is disposable income that consumers have, and number two is consumer sentiment. These both items are looking better overall as a country today compared to what it looked a year or 2 years before. So we have seen that the MAT trends, MAT trends are stable for FMCG. In the latest quarter, last quarter, we saw overall consumption demand, we saw an uptick. Rural now is growing ahead of urban. Both have improved. Urban is also improved, rural is also improved, but rural is now growing ahead of urban. Together, we see that overall macro conditions have improved, and we expect that this to sustain. Now, coming to Hindustan Unilever, there's two reasons why we had a better outcome and better results and improved results this time. A, because macro conditions have started to improve, and B, the work that we have done in creating a natural tailwind with our portfolio change. The 500 BPS change that we have done from core to future core and market maker, that ends up getting our portfolio into more high growth spaces. And this change in portfolio and portfolio upgradation and transformation is what is further supporting growth.
So how far are we from double-digit growth?
And even when we're talking about volume also, how far are we from like a higher single digit or closer to a double digit volume?
Yeah. So for double digit growth to happen, two things need to be true. Number one, of course, we have to see further acceleration in the market in terms of volume growth. And pricing will also have to come in. If I look at last 5 year, 10 year,
but mix is coming in anyway, right? You are seeing premiumization of your portfolio. So there is an element of volume, and then there is the element of premiumization. Don't you think together those would be enough for...
It was a couple of quarters of price-led growth. Now slowly volumes are coming back. So
let me unpack this. So typically we do expect 4 to 5%. If I look at last 1 decade, 7 to 8% FMCG growth, market growth, 3 to 4% was volume growth, 4 to 5% was pricing growth. Pricing growth as of now is more like 1%.
Got it.
You saw our latest quarter. So we do expect in times to come, as commodities stabilize, inflation levels become normative, we should keep getting price growth back, which has been the long-term trend. Now, keeping the price component aside, if I just focus on the volume component, if last 1 decade has been 3 to 4% growth of market, of industry, we do expect that to be better in this decade.
One of the quibbles that everyone on the street has is not that consumption isn't growing. It is that consumption is growing, but a large part of the incremental growth is coming in from, say, some of the premium D2C players, or it is coming in from some of the, at the lower end, coming in from own brands by large retail chains, and it is coming from other places. So yes, consumption is growing, consumers' wallets are, increasing, but that wallet share is not coming to the traditional PCG companies, so to say. What do you have to say to that?
So if you look at post-pandemic last 4 years, HUL has added 16,000 crore turnover to HUL. It's substantial when you compare to the scale of the industry. That's the level amount of turnover we've added to Hindustan Unilever. Consumers are preferring brands which are must-reach in beauty well-being with very differentiated proposition. We now have overall 3,000 crore D2C business in beauty well-being. And this 3,000 crore business, in fact, in the latest quarter grew at more than 25%. And the point I keep mentioning about that, it's not only important to grow a business which is digital first, but also to have a sustainable business model. This 3,000 crore business that we have, which grows at more than 25%, which is digital focus, organized trade heavy, it also makes double-digit margins as well. So we have tapped in fully, squarely into the D2C space and created a 3,000 crore portfolio. If I take a step back as Hindustan Unilever, we have 8,000 crore portfolio now, which is in market maker. This portfolio grows in strong double digits. And this is where market is also growing. So we are over-indexing ourselves, and which is why the point I mentioned earlier, the strategy of ensuring that portfolio keeps evolving and moving from core to future core to market maker, that will keep generating the right tailwind that we have in the business.
Well, what about the other categories? So you spoke about D2C, especially in beauty and well-being. But what about personal care? What about food and refreshments? Even those are sectors where you're seeing a lot of new D2C players. Eating habits are changing considerably. People are moving to a lot more, even when it comes to food. That's one of the other wallet share change that Mangalam is talking about, is that, it's not that people are not consuming, but they're consuming different, they're consuming better. How are you capitalizing on that?
Yeah. So we're seeing in two spaces that the market growth is being above average to FMCG. Number one is beauty, and number two, exactly to your point, is foods. When it comes to food, the way we have done the job in beauty, we have equal job to be done more on the portfolio in foods. Our overall beverage business this quarter grew in double digits. So high single-digit growth in tea, double-digit growth in coffee. That business is very strong and performing. Horlicks, we have a job to do. Yeah. Boost part of lifestyle nutrition is growing, but Horlicks, we have a job to do where we're gaining market share. But we have to start ensuring that consumption in existing Horlicks household starts to increase. We are relaunching Horlicks. The product itself will undergo a change to help further consumption of the category. Now, coming to packaged food, to your point, India is going through the transformation. Unorganized to organized, unpackaged to package. And this is where we will also now keep working on our own portfolio in packaged food as well. We will use Kisan as a brand for Indian cuisine, Crore as a brand for international cuisine, and we have an amazing condiment brand, which is Hellmann's. And we decided there are 6 different demand spaces in foods that will end up playing. Be it tea, coffee, lifestyle nutrition, our own business, what we call as UFS, the business of selling to restaurant ingredients and for the top dishes, and then condiments, and then mini meals, and overall the job that we have to do in that space. So this 6 demand spaces is what we'll end up getting into, and you will see portfolio transformation from Hindustan Unilever in the space of condiments, in the space of mini meals and accompaniments. Now the job that we have to do out here is to ensure that we don't get into spaces which are more staples in nature. Right. So we have made a strategic choice that we will not get into staples as this change happens from unorganized to organized and then package to package.
You have to look at a headline, HUL is gunning for growth. Let's put it that way.
When it comes to choices between growth and margin, competitive, volume growth, unblinking.
All right.
Okay,
so let's wrap it up
right.
with a final question, because the company is going into new leadership change, etc. Over the last 2 years, what do you think have been the biggest achievements, and what have been, places where things can improve over the next 2 years?
Yeah. If I look at last 2 years, I think in the period of deflation, especially last 5 quarters, we've delivered mid-single digit volume. So our focus on competitive volume growth did not change, and we've seen that getting delivered. Very important, our portfolio has changed. 500 BPS, a substantial improvement in contribution of future core and market maker. This portfolio change is giving us a tailwind to grow further. So it has been a growth which is competitive. it has been a growth which is making the business more future looking because of the portfolio transformation. And it has seen also a resilient business model where we held to our strong margins, but as needed, we have also taken decision to go and invest more by taking some margin down.
But what do you think you could have probably done better?
Place I would say we could have done better is a place in beauty well-being where our premium portfolio could have been larger. And we called it out as part of our strategy that we want to improve there, and we want to make a 900 BPS improvement in our beauty and well-being contribution of premium. So that's one place I would say I can call out which could have done better. And hence we have now laid out a very clear strategy how we will improve contribution of premium in our beauty well-being business.
And with Priya coming in, I think that's now going to be a very tough
the direction
job.
is. All right. Thank you so much.
Lovely conversation. Always great insights. Thank you so much.
Thank you very much.